would you loan me money for 30 years at 3% interest rate? Like, can you imagine that? If the inflation rate was 8 or 10%, would you loan money out at 3% interest rate for the rest of your life?
Not in a million years.
Okay, that's what the banking executives in the U.S. did. For any amount of money you want to keep the rest of your life, if you want to give it to your kids, if you want to actually retire on it, anything that's investable asset, you would put it in Bitcoin. You would put it in the strongest possible world currency, the global money, and that's Bitcoin.
2 weeks ago, U.S. regulators seized San Francisco-based First Republic Bank and sold all of its deposits and most of its assets to J.P. Morgan Chase, the country's largest bank. Though regulators and policymakers are trying hard to assure depositors that this is nothing like the 2008 global financial crisis, experts have pointed out the eerie similarities between the two events. Most importantly, how large banks like J.P. Morgan benefited from the 2008 collapse and are now benefiting from the ongoing banking sector crisis. But there are lots of differences too, especially the magnitude of the collapse we are witnessing now. First Republic, Silicon Valley Bank, and Signature Bank are currently the second, third, and fourth largest bank failures in U.S. history. Together, the three banks held assets of $532 billion. Even when adjusted for inflation, that surpasses the $526 billion owned by the 25 banks that failed in 2008. And there's no indication that the collapse is not going to spread even further within the coming weeks. Factors directly responsible for the crisis, rapidly rising interest rates, high levels of uninsured deposits, and little supervision by regulators are still unchecked, and economic headwinds are not letting off. According to MicroStrategy Executive Chairman and renowned Bitcoin enthusiast Michael Saylor, the ongoing banking sector crisis clearly proves what Bitcoin advocates have been saying for the past 14 years. The fiat system is the biggest Ponzi, and banks are legally sanctioned traps for entrapping depositors gullible enough to believe banks and similar institutions are indefectible. Saylor recently joined the PBD podcast to discuss, among other things, the growing need for Bitcoin in today's world of rapid currency debasement, double and triple-digit inflation, undue government censorship, and bank failures. According to Michael Saylor, it's a terrible idea to keep your money in the bank, a bad idea to keep it in a bank in the U.S., and a horrific idea to keep it in a bank in a country like Venezuela, Nigeria, or Argentina, where the official inflation rate is 95%. Before we listen to more clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications so you never miss our regular uploads. Also, ensure you drop your comments and observations in the comments section below. It gives our videos more visibility and immensely contributes to the channel's growth. Thanks for your support and enjoy the video.
If you're trying to use money that requires banks, you can't trust the banks, right? You certainly can't trust the banks in Africa and South America and most of Asia. It used to be Americans thought they could trust American banks. Now they're realizing that they can't trust American banks. So the first order impact of the banking crisis is people think, well, maybe the money I had in the bank's going away, and so I ought to put it in a bank in cyberspace that isn't controlled by the government or by the bankers, and that's Bitcoin. The second order impact is the solution to the banking crisis is print more dollars. And if you print more dollars, the actual monetary inflation rate goes 10%, 15%, 20%. So you think, why do you think those bonds crashed? Because they're actually claims on dollars. Do you really want to hold $1 billion of Zimbabwe dollars? What if I offered you 10 billion Zimbabwe dollars? I mean, the answer is it's going to a nickel. Okay, so if the paper currency keeps crashing, then you can't own anything that's currency related. You can't own a currency derivative. You need to own something that politicians can't print more of. Okay, well, that's oil, that's land. But the problem is, try hauling 100,000 barrels of oil from where you are to London, where you want to be. How are you going to do that? I'll give you $1 billion of land in Central Africa, and then someone takes over with machine guns and declares that everyone with large amounts of land now loses it. That happened in Zimbabwe. You're going to pick up the land on your back and carry it to France? So it's simple. If people lose faith in the banks, they lose faith in the currency. When they lose faith in the currency, they lose faith in the government. When you lose faith in the bank, the currency, and the government, and someone says, what can you trust? The answer is you can trust Bitcoin because you can custody your own asset, you can run your own node. And at the end of the day, even if the Chinese want to shut it down, they can't. If the Russians want to shut it down, they can't. If any nation state wants to shut it down, they can't. If the US wanted to shut it down, they can't. And so everybody wants something that they can trust that is beyond the reach of a corrupt politician, a corrupt corporate executive, or they don't have to be corrupt. They can just be well-meaning, trying to do the right thing in a misguided fashion and meddling with your economic life. Money is a store of value, and there are multiple monies, and they're not created equal. So let me give you the world's worst money. The worst money in the world is like Argentine pesos or Venezuelan bolivars or Zimbabwe dollars or Nigerian naira. Weak money. The official inflation rate in Argentina is 105%. But that's the official rate, which is that understates it. The actual inflation rate would be higher. And if the inflation rate is running 100%, that means your money is losing half of its value every 12 months. That means that within 10 years, you have nothing. Okay? So bad money, bad currency or bad money loses all of its value over the course of a few years. In Venezuela, you lose all your value in 36 months. In Argentina, in 10 to 20 years, the Argentine peso was 1 to the dollar 21 years ago. If you had $1 million 21 years ago, the Argentine peso right now is about 480 to the dollar. So that's not a 99% loss. That's a 99.8% loss, right?
In how many years?
21 years. Okay. So what I'm saying is you don't have money if you have weak currency. Now let's take strong currency. Well, the strongest currency in the world is the dollar. That's not money. You're losing 99% of your wealth over the course of 90 years in the U.S. dollar, maybe more. The U.S. dollar, the only difference between the U.S. dollar and the peso is whereas it takes 20 years to lose your family's fortune in the peso, it takes about 90 years to lose your family's fortune in the dollar, right? My house in Miami Beach was $100,000 in 1930. It was appraised at $46 million a few years ago. Do the calculation. It's on a path to be worth $100 million, which means that the U.S. dollar will have lost 99.9% of its value over 100 years.
Even after enjoying the status of being the world's reserve currency for almost 8 decades, the United States dollar has lost 99% of its value in the past 90 years. Yet it's the strongest fiat currency the world currently has to offer. What happens when the dollar eventually loses that status and the United States is one of the superpowers in a multipolar world or completely defeated by the emergence of another superpower? Though politicians and policymakers are trying to downplay the risks, the BRICS alliance is growing stronger by the day, with one singular aim to dethrone the United States and the US dollar. If the alliance and its powerful allies are successful in their aim, there would be even more dire consequences for investors and depositors in the United States. During his discussion with the PBD team, Saylor also discussed the reckless moves made by risk managers of U.S. banks and important indications that the crisis is far from over.
The strongest money in the world is Bitcoin because Bitcoin is absolutely capped at 21 million. It is global money. You could take $1 billion of Bitcoin across a border. You can transfer it to a counterparty, and no government can interdict that, and nobody can inflate that. At the point when the
You're talking about Silicon Valley Bank.
All of them, right? Pretty much
all these guys.
Not just the ones that went bankrupt, right? There's a host of banks. I think they had what was it, like $800 billion of unrealized losses or something. A host of banks went, and anybody that bought mid-dated or long-dated bonds at the bottom of the market when interest rates were 0, they were loaning out money forever at 2% interest or 3% interest or 1.5% interest. And as soon as you redeem, what happened, of course, is the Fed raised interest rates from 25 basis points. Actually, the rates went from 0 to 500 basis points in 12 months. That's the sharpest increase in interest rates in memory. That in itself is, I'm not going to say what it is. It's just horrific, terrifying to think that any public servant would do that. But it's equally terrifying to think that if I was your money manager and if you had given me all your money when interest rates were 0, and I said, well, I guess interest rates will stay 0 for the next 30 years, and so I'm going to loan it out as a bond and lock in a price of 2%, you would have thought I was crazy. No, there is no individual, no corporation, no rational corporation, no economic actor that would loan money forever for 3% interest when inflation is running double or triple that. What I think happens to the banking system is all of the regional banks, the small, mid-sized banks are at a massive disadvantage right now because the government is showing that they're not going to bail out those equity holders. So there's a migration of deposits from the small banks to the big banks. I think the JP Morgans, the Bank of Americas, the mega banks will continue. They'll be just fine. They'll be supported by the government. The small banks are going to struggle, and that's what you see going on right now. If you're a depositor, you'll probably get bailed out by the government. If you're a bond holder in the bank or an equity holder of the bank, you won't get bailed out, right? And so there's a crisis for investors, whereas everybody that's a depositor doesn't want to sit around and take the risk, right? Who wants any anxiety? So I think that to the extent that you rely on banks, clearly the world is waking up, and the U.S. is waking up, and they're thinking, I want to be with big banks. I wouldn't have my money in a bank anywhere outside the U.S. in a weak country, right? You need to be in a rich, strong country with a rich, strong bank.
Fiat currencies, even the strongest ones, are getting devalued rapidly. This provides a huge dilemma for investors, especially for citizens and residents of countries like Argentina, Zimbabwe, and Venezuela. And not the super wealthy and powerful that can invest in stronger economies, but middle and low-income earners that do not want their earnings and savings completely eroded by inflation and insanely rapid currency debasement. For people in this category and American investors that understand that slower debasement does not mean no debasement, Saylor says to invest in Bitcoin, the world's strongest money hosted in cyberspace and out of reach of tyrannical and clueless regimes. Here's another clip from the discussion.
With regard to what individuals should do, I think the logical answer is, for expenses, if you have expenses in the next 3 months, you have your expenses in the local currency, which is the peso, the naira, the whatever, because it's legally obligated for you to pay in the local currency. For the next 3 years of expenses, or 1 to 3 years of expenses, you put your wealth in the strongest world currency in the world. That's the dollar right now, but you make sure that you have that currency either self-custodied or you have it in a bank that you trust. That's hard. If you can't find a bank, if you were in Lebanon right now...
Can we trust you, bank?
If you were in Lebanon right now, you wouldn't put your money in any bank. You would actually put it on the Bitcoin blockchain. For any amount of money you want to keep the rest of your life, if you want to give it to your kids, if you want to actually retire on it, anything that's investable asset, you would put it in Bitcoin. You would put it in the strongest possible world currency, the global money, and that's Bitcoin. You're not going to get rich investing in dollars, and you'll lose all your money if your dollars are in a weak bank, and if your dollars in a strong bank, you'll just get poor slowly, and you're going to get poor. You're going to get poor rapidly if your money is in not the dollar, but a weaker currency, and you're going to get completely bankrupt if you trust a weak bank. And so MicroStrategy, by the way, we had like $90 million. We had $4+ billion worth of Bitcoin. So go figure, right? 98% of our assets are actually in the strong money. 2% is in the world's strongest currency in a good bank, in one of the big 4 banks, right? And that's about as much exposure as I want to a currency.
Fed Chair Jerome Powell and the Federal Open Market Committee, FOMC, have given no indication that there won't be more interest rate hikes. As a result, it's safe to assume that regional banks will continue to face intense pressure from depositors and investors in the coming weeks. In the same vein, these banks do not have sufficient equity bases to assure depositors or withhold the pressure until the Federal Reserve applies the brakes on rate hikes. In addition, there are major concerns that the banking crisis will begin a credit crunch as lenders further tighten their lending standards. This would undoubtedly heavily impact small businesses and low-income households and cause negative ripple effects throughout the economy. Then there is the very ominous warning from JP Morgan Chase CEO Jamie Dimon that commercial real estate losses may take a few more banks down. Only a few means many more banks could go down unless the Fed steps in by printing more dollars and putting the economy in more trouble. What are your thoughts on Michael Saylor's interview? Please drop your comments and observations in the comments section below. Also, be sure you like this video, subscribe to the channel, and smash the notifications bell so you get instantly notified when we upload a video. Thanks for watching.